There is nothing else that matters. Clients are the sole driver of what we do on a day-to-day basis. So the value that I give to my clients, I guess you actually can't put a description or a number to it because it's all that matters in our business. One of the biggest achievements I had in my professional career was early on, when I left the practice of law and I just started a brand new business. And I went from being a successful 30-year associate at a very prestigious law firm in Winnipeg to having no salary and starting out a business which was very time-consuming, and I did make a success of it. So I feel like that was a significant success in my life. But for sure, I feel like this Canaccord office is the proudest moment of my professional career. I always say my clients are the only thing that matters in our business, right? There is nothing else that matters. Clients are the sole driver of what we do on a day-to-day basis. We are a client-driven business, and the only thing that matters is them. So whatever that means for us as a team, that's what we have to do. I've always kind of made the joke that we take a bullet for our clients. Whatever we need to do to get stuff done, that's the only thing that matters on a day-to-day basis at the office. My view on custom portfolios is there isn't enough of it happening right now in Winnipeg and in Canada. Most shops, most times when a client brings me a statement from another institution, what I end up seeing is what I'll call cookie cutter portfolios. And that bothers me a bit because every client is different. Every single person that we meet has a different need, has a different tolerance, has a different approach. They have a different risk tolerance, they have a different age, they have a different income bracket, they have a different income need. And all that matters when you have to factor in tax, you have to factor in future generations, you have to factor in what's happening to that money. And there is no way that two people could have the same exact situation, not with the number of variables that we see. So what we excel at, and I think what people would say we're very, very strong at, is customizing each portfolio for each client. So there are a whole bunch of variables, and what we do, we identify, we discover, and then we custom build. So the custom structuring will take into account all of those factors. I feel like the team is likely the strongest aspect of the Tetrault Wealth Advisory Group. From the moment they make a connection with us, that first person, to the operations side, to the administrative side, to the investment management side, every single person on the team is dedicated to that client, and we all buy in. We also love going to work, and we're all very, very passionate about what we do on a day-to-day basis. And without that, I don't feel we could operate at the level that we do operate at.
What do I find special and unique about Tetrault Wealth has got to be, first and foremost, the staff members. I mean, we've got an incredible team that have very specialized roles, and it starts with Rob as the leader of the Tetrault Wealth Group, with his background as being a lawyer and his finance MBA, being on the Dean's list for his MBA in finance, with all the awards to back it up, anything from Best Risk-Adjusted Returns, Community Service and Philanthropy, Service of the Year, to President's Club, voted number 2 in Wealth Professionals list of top 50 wealth advisors in Canada. That's what you want as a leader in a wealth management group.
I'd say that my role here with the Tetrault Advisory Group is more on the operations side. So portfolio analysis, investment analysis, trading, client communication, a lot of things of short-term and long-term projections for the team. I'd say where I bring the most value for our clients is the dedication to get answers quickly for them whenever they require anything, and then getting things, the systems up to speed for them.
We want to make sure that the strategies that we are employing, while maybe volatile at some points, we want to make sure that the capital will be there. We want to make sure we're investing in quality. We want to make sure that we're not taking risk for clients that isn't necessary. So what we make absolutely certain to do is to find out companies and investments that have strong cash flow, that pay dividends, that have strong management, that have access to capital. And if those companies and those investments have a proven long track record of being profitable over time, those are generally companies and investments that we'd like to own. I think the wealth management industry is really on a tipping point right now because there are so many advisors that have been doing the same thing for so many years, and they're now either approaching retirement or getting to the point where they're transitioning their practice to a younger advisor, and things, in my view, have to change. Gone is the idea that you have to have half your portfolio generating 2% returns in a fixed income portfolio. There has to be changes, in my view, with respect to how the traditional wealth management model works, because it needs to be more proactive, it needs to be more reactive, and it needs to be more aware of what's happening in the world.
All right. Bienvenue, welcome tout le monde. Everyone, thanks for coming. My great pleasure to be here today. We are here today. It's our first of the Leadership Series events on behalf of Canaccord Genuity. And I'm thrilled to be your MC today. My name is Rob Tetrault. I'm the branch manager. I'm a portfolio manager. I'm senior vice president at Canaccord Genuity, the office in Winnipeg. I'm pumped to be here and to be a partner and to be part of Canaccord Genuity, which is really an unbelievable firm. And I'm so glad that we're here. They're supporting this event. And we even had people fly in from out of town for this event from Canaccord. So we got some executives here. It really is a great place for me to go to work every day. I love it. I'm re-energized and I'm so motivated to be there because I know that they have the client's best interest at heart. Enough about us and the firm. Let's talk very briefly about why we're here today. So I'm going to start. Well, obviously we're here because we have some unbelievable leaders. This is the 4th event in our leadership series. In the past, we've had Brett Wilson, we've had Jen Jones, and we had Kevin O'Leary. Today, we got them all beat because we got 3 of the top CEOs of Manitoba, publicly listed companies. And we're going to get to, first of all, we're going to get to introduce them. So I'm going to start right away with, how am I doing this again, Mox? I'm showing the video of the first one. Yes, all right, I got it. So we're going to see the first company here, just a brief video of the CEO that we have. You run that for me, please, Mox.
My favorite for sure at this point would be Boyd. I like what they're doing. I like it at this point. I think this is going to be an $80 stock in 2016.
What's interesting to you right now in this crazy market environment, Rob?
Well, I'm really interested in oil. I really like financials. Somewhere near here, in my mind, there will be a bottom in the next, whatever it is, 3, 6, 9 months. I do know that long term, I'll be happy that I bought financials around this time.
The chain of repair shops.
Yeah, this is, some would say, a boring story. I've followed this one. It's been in my backyard. I started buying this at $5, $6. It's gotten consistent growth for the last while. Here's what they do, Andy. They go out and they buy, this is a very fractured industry, very fractured. You got mom and pops running all over North America, so a one kind of store operator, and then you got multi-store operators, 10, 15, 20 shops. They're operating. These guys have, it's an old industry, so the owners are getting to the end, and no one's consolidating. These guys are the leaders in consolidating. They're still, they own about 10% of the market share, and there's around 4 other competitors around the same. So there's a 60% chunk of the population of these stores, these 30,000 stores that have not been integrated, if you will, or consolidated. What these guys have been able to do, it's pretty simple. They buy companies for assets. They don't issue shares. So they do it on debt or forgivable loans. And what they do is, over time, you're not diluted for your company. You add the earnings, you get cheap debt. They apply their model to each store. They change
it's consistent.
It's consistent, and here's the big kicker. They deal directly with the insurance companies.
Oh, yeah.
So the insurance companies love dealing with them because it's an easy process, right?
Professional.
It's professional, it's good. Now, the stock has gone up like crazy, so I recognize it's at or near high. I don't expect it to double in the next year or two, but I do expect if we're sitting here a year from today, we've gotten a nice 20 to 25% capital appreciation, and that's a pretty aggressive gain, I would say. And just to finish that, it's recession-proof.
Yeah.
People are going to crash cars whether there's a recession or not, and they might even crash more cars. 90% of their business, in my view, is recession-proof. So if there is a recession, their earnings are not going to go down. And if there is a recession, Andy, and this stock drops 30%, buy it. Buy it with all you got.
It's hard for the mom and pops now, apparently, because there's so much software in the cars, and the car companies aren't always willing to hand over that software.
It's gone. The game is different. The game has changed, and Boyd dominates this space.
So I'm going to ask one of my colleagues to come up here. We are 3 advisors at Canaccord Genuity. Really excited to have this next gentleman. I've known him pretty much my entire career. He's got 15 years of experience in the industry. His clients know him as the hardest working guy on the street. He's very, very passionate, again, about this industry, and very, very passionate about his clients. I was thrilled when he came on board at Canaccord Genuity. I'm going to get my colleague, good friend of mine, Clinton Ort, to introduce our next CEO.
Thank you, Rob. We just heard a lot about Boyd, particularly about the stock, and as you saw from those charts, it's done quite well. Investors with Boyd have been well rewarded. And the biggest part for me, what I think is important, is it has local roots. A very big company now, but it started right here in Winnipeg. The very first collision repair center opened in November of 1990. Not too long after that, 93, Brock Bulbuck joined the team. He's had many roles with Boyd throughout his career, been in multiple senior management positions. A big part of their development and growth was from him, and since 2010, he has been the CEO. We're very excited to have him with us. Please help me welcome the CEO of the Boyd Group, Brock Bulbuck.
All right, perfect. Next, I'll introduce this next company. But before I introduce the CEO for the company, let's take a quick look at a video here. I feel honored to be I'm one of the few guys probably that's had the opportunity to introduce Mr. Soubry twice. He probably doesn't remember this, but back when I did my MBA, he was the guest speaker at our convocation. I got to introduce him at that point, and he was crushing the jokes out of the park that night. What I took away that day is how humble he is and how proud he is to be a Winnipegger, and Clinton touched on this earlier, but he's so proud to be a Winnipegger. His roots are here. He was the CEO of Standard Aero back in the day, up until I think 2009 or so. CEO of New Flyer, then New Flyer, now NFI Group, since 2010. He's basically, his success should not be a surprise because he's done a ton of work I'd say very successful work building Standard Aero, and we now have two companies that he's touched that employ thousands of Manitobans. So, thank you for that, Paul. From the perspective of the economic dynamics in Winnipeg, you still have to deal with everything that's going on globally. In 2016, he was named not the CEO of Royal Bank, not the CEO of BMO, not the CEO of Suncor. This gentleman was named CEO of the Year by National Post. Really, really thrilled to have him here, consistently giving back to the community. Let's give it up, Mr. Paul Soubry. And then before I introduce Kevin, let's take a look at the third company here that we're featuring.
Hi, I'm Natasha Frakes, and you're watching Market 1 Minute. I'm here with John Arbuthnot, CEO of Delta 9 Cannabis. John, thank you so much for being here.
Thank you for having me.
Now let's get right into it. As I'm sure you know, there are several other large cannabis producers in Canada. So what makes Delta 9 stand out?
Well, as one of Canada's longest running licensed commercial producers, we've been able to leverage our management team's expertise to create a very lean CapEx growth model. And when we combine this with our lean operations and production models, I think what separates Delta 9 is a focus on lowering costs and maximizing return on investor capital.
And how have you managed to do that?
Well, our innovative grow pod design allows us to expand on a cost per square foot basis that is only a fraction of purpose-built facilities. When we factor in the modular nature of that expansion, we're also able to do it in a time frame that's much less than our competition. From the production model side, these grow pods give us a level of control over the production environment, which results in a high-quality product and also high yielding, but more importantly, low cost.
Now, Delta 9 is partnering with Canopy Growth to distribute nationally. So how will you meet that huge increase in demand?
Well, we recently completed a $23 million bought deal financing, which allows us to increase our production capacity on a fully funded basis up to 600 of our modular grow pods. On an annualized basis, this represents approximately 17,500 kilos of annual production capacity. Now, from a dollar value perspective, that's in the area of $85 million a year on a wholesale basis and about $170 million on a retail basis. The partnership with Canopy Growth allows us to enter a significant distribution channel.
And in the past, you've mentioned a Manitoba advantage. Can you explain that?
Yeah, so when we talk Manitoba advantage and when we look at our sector, the major cost centers are power or electricity, labor, and warehouse space. And beyond our central geographic location, we are blessed with some of the cheapest power, labor, and warehouse space costs across the sector.
Now, moving forward, with recreational cannabis sales being legalized in Canada, what are your goals over the next several years?
Well, goal number one for Delta 9 is to increase production capacity. Beyond that, when we look at distribution, our business model will be very focused on vertical integration into the retail side of the business. When we look at the prairie markets, Manitoba, Saskatchewan, Alberta, all three provinces have announced privatized retail frameworks. Our focus will be on vertical integration, maximizing our margins, and maximizing investor returns.
Sounds like there's a lot to look forward to. Thank you so much for being here.
Thank you.
To introduce our next CEO, I'm going to ask another one of my colleagues, and I've known this guy for a while too, and I know him as an incredibly humble, quiet, yet very intelligent investor for his clients. He's also dedicated his entire life, 30 years. He brings the gray hair to the trio. Is that fair, Kevin? He also really likes to talk stocks, and he really likes to talk the Winnipeg Jets. So I'm going to bring it up, and I'm going to ask him to introduce our next CEO. Ladies and gentlemen, Kevin Becker.
First of all, let me state I have no samples of the product. You can ask in the Q&A if John's got anything, but that's nothing I'm going to deal with. I'm proud to introduce John Arbuthnot, CEO of Delta 9, with us tonight. I've known John since before his Delta 9 time, when he was a cold caller for us at Bieber Securities, for anybody who can remember that. As we might guess, John is one of the youngest CEOs in his space, following in the footsteps of a Mark Zuckerberg or a Bill Gates. No pressure. He left school to pursue his dream to build his own business. Just to give you a little background on Delta 9, they were founded in 2012 by John Arbuthnot and his father Bill. In December of 2013, they obtained a license to produce marijuana for medical purposes, and in March of 2014, they got a license to distribute. In November of 2017, almost a year ago, the company went public. It had a great uptaking, and they've taken the business from 2 employees at a start to well over 50 now. They are continuing to grow as a company, and there's lots of advantages going forward that they have. Under John's vision as a CEO, he's been able to help Delta 9 hold a license to have retail stores in Manitoba. They have an agreement with the government of Manitoba to produce 2.3 million grams, basically through liquors and lotteries. They are the preferred supplier of PharmaSave, the pharmacy company for across Canada. They have over 650 stores. They also are the creators of the Grow Pod, which has allowed them to reduce cost as well as get ahead for where their expansion plans are going. So without further ado, there's less than 7 days now before it becomes legalized, and nobody wants to see me sit up here and talk about it, so I'd like to introduce John Arbuthnot.
All right, looks like we got 3 mics to share, so it'll have to be sharesies. I'm going to start right away with just an introductory question that a lot of people have asked me, And I'll start at the end with Brock. You've obviously had a lot of success lately since you've been CEO, not just lately, since basically the moment you've been CEO. What set you guys apart, and why do you think, what sets you guys apart from your competition? I mean, you've heard me say it, I'm probably wrong. So what sets you apart?
First of all, Rob, thanks a lot. After the introduction of John and cannabis, I get to talk about fixing cars and what I've been doing for 26 years. But
wait till you get to the bus stop.
Paul and I have decided that we're here for filler, so everybody's here to see John and learn about his company. But thank you for having us, Rob, and colleagues. And Boyd is we fix cars. We're in the automotive collision repair business. We have a scale. We enjoy advantage of scale. We enjoy an advantage of a leadership position in a North American industry that is consolidating. And that consolidation is giving us a very favorable tailwind. We believe that we have a very strong strategy to take advantage of that consolidation trend. We have a very passionate leadership team that has been together a long time, that is intent upon achieving our overall objectives. So that's what we believe has given us the success that we've had to date.
Thank you. And Paul, I'll ask you the same question. What sets you guys apart from the competition? You've obviously had a lot of success since you've been CEO in the company. I know you've done a ton of acquisitions, but what sets you guys apart?
I echo what Brock said. It's an honor to be here, and thanks for doing this. But Flyer's a neat story. It's Manitoba started in 1930. We make buses, and the business had gone through a number of ownership changes and growth and challenges and private equity flips and IPOs and secondaries and so forth. And so the last 10 years of our life has really been about differentiation. A couple of things of history that are very cool. First of all, 1 out of every 2 buses in North America is either a New Flyer or an MCI in that class. So the reach coming out of Winnipeg is really amazing. The second issue is that over the evolution of buses, lots of things have happened. When I went to high school, we went onto a bus and you'd step up the stairs. And in the 90s, New Flyer were the first ones to create a low-floor bus where you could actually roll on with a wheelchair or walk on and off with normal citizens getting on the bus. And so with a span of about 7 to 10 years, the entire bus industry in North America changed to low-floor. There are no more high-floor transit buses made, which is really cool. The other dynamic I think that's really set us apart from our competitors is that we've chosen to be propulsion agnostic. And so we live in an environment where 90% of our revenue is, maybe 80% of the revenue is public funding. And so the issue of wanting to migrate and move with transit agencies, where they went from original gasoline engines to diesel engines to hybrids to natural gas and now all electric. And so we've chosen to have a strategy if we can have any one of those propulsion systems on exactly the same bus platform.
What's the split right now for your buses?
Yeah, it's probably about half of it is natural gas. Maybe 5% of it is now all electric. Diesel's maybe about 20%, and then hybrids in there. But give you an example of New York City. We have buses in New York City. There's probably about 2,500 New Flyer buses out of a total 6,000 in their fleet. And we have hybrids, natural gas, CNG, and all electric exactly in the same operating platform. And so that ability to migrate with the customers as they change the political dynamics and the funding and the maintenance and so forth has been really cool. And then we had the opportunity to buy MCI, which is also a neat Winnipeg story. Ironically, New Flyer founded in 1930 by a Ukrainian immigrant to Canada. 2 years later, MCI founded by a Russian immigrant to Canada. And the only thing we did over the years was steal each other's people. And so now bringing those businesses together has been really cool, in technology sharing and innovation and all these kind of things. And so we're the largest in our space, and that really gives us a little bit of an opportunity to kind of differentiate and lead the pack.
Very nice. And by the way, MCI is short for Motor Coach Industries, for those who missed that. Big acquisition a couple of years ago for New Flyer. Same question. Really interested in how you're going to respond to this one.
No, well, first of all, Rob, thank you for having me here this evening, and gentlemen, thank you for the kind words on the inset there. I was interested in the event because you guys were here, so we'll throw it back your way. No, speaking to Delta 9 and really differentiation, I mean, you hear so much about the cannabis sector right now and the different companies and strategies, and it's very difficult for cannabis companies to really differentiate. So I think has become an important focus for Delta 9 to determine exactly what is that differentiation focus for us. And the first step for us was really the technology side. So that was our proprietary Delta 9 grow pods. Now these are designed by Delta 9. We manufacture them at our facility in Transcona. Effectively, they're a retrofitted shipping container, but we take your standard 40-foot high cube shipping container. We install customized wall panels, electrical, lighting, HVAC systems, security, epoxy surfaces for the Health Canada compliant cleanable surfaces and security. And what we're left with is a unit that's now modular, it's scalable, and it's stackable within our warehouse. So we get to take advantage of production on multiple floors. Now, a number of benefits to these modular pods. It gives us a very high level of control over the production environment, and we have the benefit of being one of the, and it's only a 5-6-year-old industry, so being one of the longest running licensed producers over that time has given us a lot of experience on the production side of the business. Having a high level of control over the factors that most directly contribute to product quality, so that's temperature, humidity, light intensity, parts per million CO2 saturation, all of these components contribute to a high quality product. We felt that the foundation on which you build a good business is a high quality product. So really the way that we're able to achieve that is by having these Delta 9 grow pods. Now, other advantages to the pods, it gives us a built-in risk mitigation strategy, and what we mean by that is we're growing in a very small area. Each pod is only 320 square feet. Now, we chain hundreds and hundreds of these things together in our facility to give us big production. But what it means is if there is any instance of contamination or pests or mold, mildew, all of those things, this is an ag product, an ag crop, so you can have any of these issues that come up with agricultural crops. So putting it into that type of setting means that there's an inherent risk mitigation strategy. If there is an instance of contamination, very little chance that it's going to spread throughout the facility and cause a systemic failure. And we've seen the challenges in our industry with systemic failures at these large greenhouse facilities. So again, a built-in kind of de-risking play for us. We also feel that the return on investor capital is there. A unit that costs us $25,000 to produce puts out about $300,000 a year worth of products. So every time we roll one of these off the line, put it into production, there's a good return on that capital investment for our investors. Now, the other real differentiation for us is vertical integration. Now with recreational, we want to get right in there to retail and distribute the product to the end consumer, control the marketing and branding, and then the real emphasis from there is on, again, return on investor capital. That's really the Delta 9 story.
I was going to make a joke and say, can I get one in my backyard? But then I thought, you know, is that potentially a future where you guys are going? Actually make these modular?
Yeah, you know what, Q2 of this year was the first quarter where we sold these units to third parties. So we are now looking to market these units. They're typically to value add joint ventures that we either have a part in or an offtake agreement or some type of value add for Delta 9, but there's certainly a market for these, particularly down in the United States where we can't sell our cannabis, but we can sell our grow tech.
Perfect. Paul, I'm going to ask you about challenges. I know there were times for sure when you were CEO that you know, you were not the stock of choice of someone on BNN. Tell me about the challenges and how you kind of came through out of that.
Well, you know, in John's case, he gets the opportunity to start a business from scratch. And so all the things that you want about a culture and a facility and so forth, you get to grow and develop over time. You know, in the case of Brock's business and our business, they're established businesses that have certain elements of culture. In our case, you know, private equity flips and then IPOs and years of lack of investment does two things. It puts you behind the curve in terms of new product development and quality and so forth, but it also gives you a culture that kind of doesn't necessarily believe. And so when you walk in and talk about operational excellence or lean or, you know, general cultural type dynamics, they've heard it before many times. And many companies like ours had consultants come in and try it and leave and so forth. And so, you know, I had the opportunity of joining Flyer in 2009, and I think the single biggest thing that set us on our path going forward is we wanted to make it physically different. So my first capital expenditure was for $500,000, and I asked the board for money to pave the parking lot. It had nothing to do with building buses. But the people that wash their car, come to work, tromp through mud, and then I say, hey, you're in a dump here, but I need you to build a Swiss watch. That whole thing really set the stage if it's going to be different. And so if you walked into our facility, which you have, Rob, you know, everywhere there's 4 lights, there used to be 1. The walls were dark, the ceilings were dark, the bathrooms were unacceptable, the cafeterias and so on and so forth. So in our world, we went after the physical culture and wanting people to want to be there, not because they have to be there. And that really helped us fundamentally transform from a job shop type environment to flow lines and part fabrication to feed those lines and inventory at point of use and all those things. And it's really been cool. As we've been able to grow and acquire businesses, we've taken that same kind of operating mentality, culture first, treat people like people, get serious about investment in the machine, has really allowed us to grow the business, which has been very cool.
That's interesting, the physical culture. I hadn't thought of that as a concept, but that's just a great idea. Once you had that down, then you obviously moved to, I guess, the emotional or the day-to-day culture inside. And
well, you know, you got to get people to trust you, and we know that all in our businesses. But you know, if you walk into an environment and you give a mechanic a wrench that's not torqued or that isn't to the right tolerance, and then you're mad at them for not building a good product, that's on me. That's not their issue. And so it was much easier to get the culture right, and then the physical dynamics, laying out the factories. And if you came to see the way we build a bus now, in Winnipeg, for example, we used to have 2 parallel lines, and each line had its own leadership team, it had its own inventory, and so forth. Now what we've done is we've put a mezzanine so that there's a team building underneath the bus and above the bus at the same time. We've created a whole bunch of reduction in the need for redundant manpower and overhead. But rather than send the people home with the freed up space and the people, we decided to fabricate parts adjacent to the line. So rather than a door built by somebody, then gets shipped to somebody, then shipped to us, and we break it or lose it or whatever, then we're building the door adjacent to the line and put it right on the door. Consequently, the labor unions and the people now, the value add's gone up dramatically from return on invested capital and return on sales business. But now you got people saying, hey, this fixing the business isn't about sending me home, it's about wanting to go somewhere. And that's contagious.
Very interesting. I had a couple questions here about culture, but I'll just jump right into it with Brock. The culture itself, is it harder to do through a company like you guys where you got, remind me, how many stores do you have now?
About 530.
530 stores. And there we go. And only like a dozen or so in Winnipeg, something like that?
In that rate, yes,
yeah.
about 12.
So does it become hard to run the culture kind of in that situation? Because Paul touched on culture, and that was a big change.
We spent a lot of effort and energy on building culture, and I think in the aggregate now we have about 7,600 employees. And I would say in about 2010, 2011, at one of our planning meetings, the feedback I got from our senior leadership team was that we didn't have the right vision, mission, and goal for our company. And I said, what do you mean? Well, it's crystal clear. We're going to be a leader in the consolidation of the North American collision repair business. And they looked at me and said, well, that means something to you, and that means something to us, but it means nothing to the guy that is turning the wrenches in our shop or washing the cars after they're finished. So we developed a mission and goal that every one of our employees could have top of mind every single day. There's lots of noise in the work that every one of our employees, every one of our team members does every day. Lots of things that bombard them that make it easy for them to come off the task that they're should be focused on. So we've created a mission and goal, which is very simply to wow every customer and be the best. And we've now spent the better part of 7 years continually taking that message to the field, going out and talking to our teams, bringing our leadership teams together to talk about that and how we're going to truly entrench that culture across our entire company. We built employee recognition programs around it. We built our standard operating procedures around it. So that's how we've tried to address the issue of building a culture across miles and miles of geography, very divergent locations, and I think it's very important for any company. You have to have a common goal, and you have to have every one of your employees know and understand what you're endeavoring to do as a business every single day.
I remember reading, when I was reading up on your company, correct me, the numbers are probably wrong, but I remember you spending something along the lines of like either $500,000 or $750,000 on every single store that you acquired to, one, do some, a bit of marketing, and two, to do some culture. So you're certainly not shying away when you're acquiring these. You're certainly obviously prioritizing that.
I'm not sure what you read, but we're not spending that much money on building culture in every store. I mean,
Not
it's,
culture,
it's
but
an
culture and
ongoing
marketing.
process, and we spent lots of effort, energy, and financial resources. You may be considering in that number capital investment as well, equipment investment, but culture building is a huge part of what I do, what our leadership team does every single day.
Thank you. I imagine the culture at Delta 9 is a little bit different. So on the culture question, one, and correct me if I'm wrong, I have no idea, but I'm guessing that people want to work there. Is that true, one? And two, what is the culture like?
Yeah, well, on your first question, honestly, a challenge for our HR department. Whenever we put out a job listing, we'll get 700 people apply. And that's great. They should absolutely want to work there, but it does pose a challenge in terms of screening and actually walking through to find that final candidate. But, in terms of culture and obviously much different commentary than the more established businesses, much larger businesses, we have been a family business. Kevin mentioned on the way in, started with 2 employees, myself and my father. From there, the first several years of the business were fairly small, between 12 and 25 employees. So you really build that family-oriented culture where everybody knows everybody, and you can get it if you need to. We're good. Okay. So the culture begins to build from that small family setting, and really on the heels of our go public last year, or last November. We're now over 150 employees. More will be coming on in the next several weeks as we bring on retail. 20 additional staff members at a minimum per retail store that we add. We're adding 4 more through this year. So that exponential growth is now there. And I guess the challenge for us is maintaining the benefits of that small business, that family-oriented business culture while you're growing. We certainly try and ensure that those values are really perpetuated out through the rest of the company. And I guess, this is really speaking on the leading edge of some of these challenges coming on. Again, for us now, it's retail, where we're not all under one roof in one manufacturing facility here in Winnipeg. We're starting to branch out now across the province and ultimately across the country. So I guess check in next year when we do the follow-up, and we'll see how we're doing.
Thank you. I'm going to switch gears a tiny bit to decision-making and hierarchy. So maybe I'll start with you, Brock. Specifically on the hierarchy at your company and the decision-making. As CEO, what do you feel the optimal hierarchy process is? And then perhaps a follow-up on decision-making. How do you involve kind of those below you? I know it's 2 questions, but feel free to answer either one or both.
I'm not going to attempt to answer the question of what's the optimal hierarchy, because I'm sure that there are a lot of different models that work well in different organizations. I can tell you what we do in our organization.
Please, yeah.
We have an executive management team that consists of 9 people, including myself. That team encompasses my direct reports, as well as some key executive operational leadership that report to our president and chief operating officer, as well as some of the key support areas of our business. That executive management team meets by way of video conference every week. Every Monday we call the executive management team our EMT. We have an EMT video conference where we have really 3 objectives. One is to communicate status update on what each of us are really working on as key priorities. Number 2 is to ensure that we have continuing alignment every single week, that one guy isn't going off in one direction and another, and our VP of marketing, she isn't going off in a different direction. And thirdly, to really try to address any cross-functional integration matters that can very easily occur when you have people working independently in silos or departments in silos. So we want to have a communication forum every week where we can address those before they become real problems. Beyond that, the executive management team works with an extended leadership team of about 120 or so of next level leadership, and that group would have regular recurring conference calls and meetings, obviously not at the same frequency that the executive management team would get together by way of the video conferences. So that's really our hierarchy and management structure.
Video conferences, they work well?
Yeah, I think for us, I like them better because you know, you get on a conference call. We're a distributed business. We have leadership across 24 states and 5 Canadian provinces, and when you get on a conference call, you really can't see what other people are doing. I think video conferencing really brings out a higher level of engagement in terms of having that distance communication or distance meeting. So we like it. We think it works well for us.
People are not sending emails when they're on video conference.
No, if they do, they get someone's going to call them out on it, and it usually isn't me. So
nice, thank you, Paul. Same question about the hierarchy, but more kind of in the decision-making process and how you involve either the people below you in the hierarchy to make those decisions.
Yeah, we're a lot different than Brock's dynamic. We call our leadership team the ELT, the executive leadership team. But rather than a traditional, one person and a bunch, we've chosen to make it like an L or a matrix type organization. So we have 3 presidents that have full P&L balance sheet cash flow of their businesses. So one is New Flyer Transit buses, one is Motor Coach Industries coach buses, and the other one is our parts business. And so they have their own teams and their own management cadences and their own reporting and so forth. And we use functional executives to knit the whole thing across. So we have one gentleman who's responsible for all supply chain across the business. So and what we've decided to do is to try and work in an environment where that matrix, where there's not a solid line and a dotted line, they're both solid lines. So in the case of supply chain, there's a VP of supply chain sitting in those crosshairs, and both of the leaders are going to set the objectives, and both of the leaders are going to sign off on the performance review. So it's harder, but it sure forces a lot more alignment and clarity of task and the things that Brock talked about. We too are distributed, but we have 32 sites. We don't have 530. And so the video conferencing compared to probably many of us 10 years ago is materially different in terms of we now have invested in 60-inch televisions all over the place, so you can actually see whether that's an ugly shirt or a bad tie. And you can see whether somebody's sending a text, and you can probably read it in some cases. And so that dynamic of cadences of meetings and so forth. The other thing we've decided to do is to use project teams or councils. So, when you acquire businesses and you have a different operating model that they come from, it's not easy to change them from Oracle to SAP tomorrow and those kind of things. And so we've set up councils across the business. So one of the predominant ones is the ITSC, the IT Steering Committee. And so this group of people across the business manage the IT roadmap themselves as a functional team, as opposed to some executive dictating it. So it's driven from inside the business. We've got Facility Council that makes all the facility optimization, investment, CapEx across the business. And it's really been cool to watch people get into the game and not be waiting to be told what to do, because they're on the ice or they're on the field. They're the one that playing the game, and nobody's really dictating it. They're working as a committee, and that's been really, really cool for us. And then, of course, as we all are public companies, you got delegated list of authorities and decision making and so forth. And so, we got for example, capital expenditures, different levels, and anything over, $500,000 every Friday at 3 o'clock. You go to CapEx that's that big. You got to come to this little team, and we get on the video conference or in person and sign it off. And so you get into those cadences where people make decisions, or they know they got to go to some place to get approval. It's worked really well.
What would you say to someone who says that, that would describe those as silos and inefficient? What would you say to someone who would say that?
Well, they're only silos if the functionals are not doing their jobs of knitting it together. So we got a supply chain, we got a accounting and finance, we have HR, we got legal, and my next one will be a technology person to make sure that we're knitting it together. Nice. But the trade-off of the silo is you got clear ownership, again, balance sheet cash flow, right where the game is being played, as opposed to somewhere else dictating those things. And so you got ownership, but you got the knitted across. And for us, it's worked very well.
Yeah, I could see that. I'm going to ask you a slightly different question, John. With respect to, again, so we talked here about decision making, we talked about hierarchy. I'm curious what happened kind of when you went from 10, 12 employees to 20, 25, 30. How did you approach that? Did you have challenges there, and how did you approach the kind of hierarchy growth? You obviously had to add some managers and sub-managers and whatever else, and were there some challenges there?
Yeah, so I mean, it's been a really interesting evolution, and I think it is for any company to try and leap beyond that original core group to becoming a growth company. And for us, and over the last year, that's meant adding department heads, and where very often in startup businesses, your founders are literally doing everything. They're touching every component of operations and HR and IT and all of those components. They're really knitting it all together. From their specialization is required. There's simply too much to do. So, from there and on our side, it's meant putting in people in operations and in IT and in HR and now in retail, all of the different components, production, processing under our more cannabis-based operations. Of course, for us, the transition as well over that same period has been toward being a publicly traded company, so that's meant adding in a board of directors that ultimately the senior executive is accountable to, ultimately holding myself accountable. That's something I'm getting used to. But building in really that hierarchical structure, and I think it's the foundation on which any business needs then to grow. It would be impossible for me to go out and hire 500 employees, but when you have proper managers in place, and again, it's that foundation where growth then can occur. And of course, unique component for the cannabis sector as well is this is the first cannabis sector in the world that we're developing right here in Canada. You can't simply go and hire a cannabis executive. So very often we're trying to find someone from with a lean manufacturing background for operations, or an ag or nursery background for production, or again that IT background for that focus, HR in a large company setting to come run an HR department that can do hundreds or thousands of employees. So you find those skill sets that are overlapping, and again, as we chatted on, everyone wants to work in the cannabis sector, so ultimately that pitch becomes a little easier.
No kidding. Thank you, guys. Great answers. And this is a leadership series, for those of you who forgot. So I'm going to switch gears and ask you guys about your leadership style. A lot of people here are leaders, either in the community, in their business, in some philanthropic work that they do. So I'm going to ask you, first of all, to talk about your leadership style, and if you can, touch on your weaknesses and how you address that. I'll ask you that one, Brock. Your leadership style. Touch on your weaknesses, and I know what mine are, but I'll let you go first.
Generally, I would summarize my leadership style as collaborative. I try to be a consensus builder. Sometimes that means that decisions take a lot longer than they otherwise might take, because it would be very easy to make a decision in isolation and then ask people to execute it. But I really believe that you need buy-in as a team for decisions, and for that reason, I often syndicate lots of major decisions. I would say
specifically, how do you do that? Specifically, when you syndicate?
I would syndicate them with the executive management team or individuals within the executive management team. And I'll tell a funny story. Not a funny story, but a story that illustrates what I'm talking about. In 2004, when we made a major acquisition in the U.S., we bought Gerber Collision in Chicago, Illinois, which at that time was 16 locations. And we made the decision that Gerber had a superior operating model to that which we were using in our U.S. businesses at that time. So we were going to reverse integrate all of our businesses under the Gerber management team and the Gerber operating model. And then it came time to decide on brand. We needed to decide what brand we were going to use. We had an existing brand in the U.S. that we were in the process of building, taking all of the acquired brands and merging them into a common brand in the US. And then we buy Gerber, which had a very strong brand with our insurance company clients. We made the decision to go with the Gerber brand, but then we had the decision as to how we were going to, what words we were going to use with that brand and how that look and logo was going to be. That decision probably took, we had a small subcommittee. We wanted to get it right. I wanted to have everyone have buy-in. There's a lot of emotion that goes with brand. We were going to be changing the brands of some businesses that some of our owners had built from ground up. So that was a consensus decision. I spoke earlier about our overall mission and goal that we put in place in 2011. That was another syndicated decision. So I think my leadership style is one to attempt to build consensus for major decisions. I'd say one of my weaknesses is probably that I'm an accountant by training. I like to get into the weeds, and at times I catch myself getting into the weeds too much. One of the things that I think has helped me overcome that has been the growth of the company that has really forced me to stay out of the weeds more than perhaps I would like. So.
You're the guy at the lake who's reading the financial reports at 10 a.m. on the dot.
That and many other things as well. But
so did you go with Bring It to Gerber?
That didn't sound as good
No?
as Bring It to Boyd. So no, we've got different jingles in the U.S.
Good. Well, thanks for that. Paul, leadership style.
Yeah, I think very similar to the way Brock described it. By the way, one of our leadership camps, we brought Brock in just after he was rolling out his WOW mentality and had him speak to our teams. And I think one of the best lessons you can learn, John, is bring people in to explain, not that they have the answer, but case studies and real learning so that you can then make stuff, steal the best and make it your own. And we really learned a lot from Brock's a different business, different cultures, different everything, but that whole methodology of how does that person relate to make their job better. Just an example of my view. My predecessor was an accountant and a very strong, focused kind of turnaround guy. And his methodology of managing was that the VP of Finance was accountable to him and the VP of Sales was accountable to him and operations and so forth. My view is that each of those people on our team and our leadership team need to be accountable to the team, not just to me. And so that's why our version of what Brock talked about in terms of executive leadership meetings and reporting and methodology. So for example, we each write all the way down to the leadership level. So now we've probably got about 300 people sets out at the beginning of the year their own objectives. And so you have strategic objectives and operational and process objectives. And in many cases, I ask them for a personal objective. I don't care what that is. And rather than reporting to their leader, they report to their teams. So that concept of, hey, I said we're going to use blue pens this year, and we're not doing it, and I got to get that done. And that's been really helpful to kind of get people kind of to buy into that thing. Unlike Brock, I got D's in every accounting course I took. So
You always say that, Paul. Every time I hear you talk,
it's true.
I doubt that. For some reason, I doubt that.
Slowest kid in the class. And so I gravitated more to the organizational behavior stuff and the marketing and business strategy and so forth. So I don't have the ability to get into the weeds and that stuff, but I do like getting into the weeds and the other sides of the business. I think my biggest areas of development continue to be time management. You know, to Brock's point, and John sees this, there are only so many hours in a day. And the days where I could, go home and have a nap and go back to work until 2 in the morning and come up at 6 are long gone. And so the bigger your business gets, you can't do it yourself. And then the other thing is where you spend your time. And I've been doing a lot of kind of research now around how do you make decisions about what you spend your time on. And investor relations can be absolutely all-consuming. Acquisition type opportunities, personnel issues, and so forth. And we took a course a couple years ago for all of our leadership team that was called Eat Your Frog. And Eat Your Frog is this whole concept of if you're really good at being honest with what you got to get done, but highlighting the ones that'll have the biggest impact on the business, those are your frogs. And I've been religious for the last 10 years about trying to identify my frogs and eat my frogs, not just tick off the stuff that's easy to get done. And because you only have so much time and effort and resource, that whole thing, and we've permeated that through our whole leadership group where the vast majority of them have their frog list on their desks. And so just ask yourself, is that the biggest impact? That's a culture issue, but it's also a style, and it's been very effective.
As a francophone, I take offense to eating frogs. But I do see the
delicacy in some places.
Delicacy, yes. John, tell me a bit about your leadership style and how if it's changed over the past through the growth here.
Yeah, so
and touch on weaknesses too, if you'd like.
No, absolutely, and again, very different story in terms of some of the background. And Paul, I'm learning from just during Brock's talk here, in terms of leadership, but really in terms of how I've grown with the business over the years is being involved in all aspects of the business. Early on, that was being involved in production, so actually growing the product that we produce. From there, getting into processing. From there, the packaging, the marketing, sale of the product. Working with, on the patient side of the business in terms of distribution, working with doctors, working with pharmacists, and those components. As the business has grown, I've touched on all of these different aspects. So, really, as that translates to leadership style, I think it's trying to lead based on my experience in our sector. And as the business has grown and we're having to specialize and put people in those positions, imparting whatever type of experience I have in those areas that are cannabis specific, and then trying to bring in that non-cannabis expertise to contribute to our management team. I want to say we're quite different in that we're still a small enough company that I would characterize myself as a benevolent dictator, in that a lot of the decisions are still funneling up through my office. Again, a lot of the fast-paced nature of the cannabis sector is a lot of these decisions are having to be made very quickly or otherwise. So I would characterize it a little bit different than some of the more collaborative components that we've heard about. Really, I think my challenge or my weakness then becomes in a lot of these areas letting go and building those teams that become very functional and are certainly experienced and very capable of operating and not having myself horn in on every decision that needs to be made. So certainly a growth path not only for the company but also for myself as a learning curve.
For those of you who don't know, Canaccord Genuity did do that raise that you talked about earlier. Was it 23 million or something?
Yeah, absolutely.
23 million. So that was our firm who did that.
You're our lead investment bankers, and we appreciate that, Rob.
Yeah, pleased to do that. I'm going to switch gears, Paul. I remember I forget where I saw you speak this, but I vividly remember this story that you told about a painting in your office, and how it had to do with, I think there was a rear view mirror, and there was like a dashboard on a car, and you had seen it with your wife or your mother or something like that. I forget the story, but I want to talk about vision. So maybe feel free to fill the blanks in that story and what that means for vision for your company.
No, I think it's a personal one because my dad worked in Manitoba. He worked at Versatile for many, many years, and he used to use the automotive, or in their case, the agriculture analogies of you got to look at your gauges to know kind of how the machine is working. You got to look at your mirrors to know where you've come from and what's around you. But you also got to look at through the windshield to know where you're going to go. And so, one of those, probably never happened to any of you guys, but I'm standing outside of Winners for about an hour and a half. And there's a picture in the window that looks exactly like that. It was $59. And in fact, it was cheaper because it was scratched. So I got some, got a deal on it. But I just thought that was so cool because my dad kept saying those things to me. And so I've tried to use that in our world as a leader because the game changes all the time. And, like John just said, you can't make all the decisions. And so if people can use that kind of analogy of understanding all the different elements, but also where you're going, it's really critical. So we parlayed that into this really simple graphic of a pie chart, and there's kind of three equal pieces, and one's employees, one's customers, and one's shareholders. And I just say to our teams, you only need one decision tool in this place, that every time you're going to pull that lever or make a decision, look at that chart and just stop for a second and say, what does it mean for my employees, my shareholders, and my customers? And that dynamic of if I don't have happy, engaged, trained, safe, well-paid people, I'm going to build crappy buses, and therefore I'm not going to have customers, and therefore if I don't make money, I don't have any shareholders, and on and on. And so it's been kind of a neat way of parlaying that whole know where you are and have situational awareness, but also, you know, vision going forward. And so it's been kind of a cool thing.
Well, at least if you're not looking in the windshield, at least Brock's going to have some clients, right?
That's right.
Because you'd be crashing the car and then, okay, anyways.
Yeah. When a bus hits a car, it doesn't get repaired. We win. We had this debate before we got out here saying, okay, now, both of us have mixed feelings. We want John to sell, he wants them to sell it to the drivers so they screw up their cars. I want him to sell it to the guys so they get on the bus and not drive their cars. So, you want to rebut?
I actually didn't say that. I think Paul might have paraphrased that for me.
And we're big on the social responsibility factor. And
Of course, yes.
Don't drink and drive, don't get high and drive. We'll emphasize that.
Yeah, so the brownies that we've put under your chair, do not consume them and drive. How many people are checking on another chair for brownies right now? Brock, I'm going to ask you about what you see next year, vision for the future, and specifically what you see for next year. Because I know you mentioned, or maybe you didn't mention it, but effectively doubling the sales numbers in the next, I think it was 3 or 5 years. Or
Right, yeah. Our strategy since in 2015, we set out a goal to double the size of our business by 2020. And as I outlined at the outset, our industry is giving us great opportunity to do that. It's a highly fragmented industry. Almost 70% of the industry today is owned or in the hands of single shop independents. Insurance companies are consolidating their repair supply chain, and they're looking to companies like us because it's more efficient for them to deal with us. We have a better value proposition. We deliver it essentially better, faster, cheaper. And we've got this huge runway of acquisition opportunities. So we set a goal, and at the end of 2015, we set a goal to double the size of our business by 2020. And we are on pace to achieve that. So when we look out next year, subject to the game changing, which we always have to consider, and we're always looking in the windshield to see if it is going to change. Our strategy for next year is to continue to execute on that plan to double the size of our business by 2020. And we suspect that when we come to when we get to 2020 and we've achieved that goal, that our plan going forward is not going to be all that dissimilar than the plan that we've been on now since 2016. So that's what I see for next year.
so I think, so that'd be like, would it be 10% kind of acquisition growth and 5% same stores, something like that?
We've tried to stay away from guiding the components of our growth. When we set the goal to double the size of our business, and that translates into an implied annual average growth rate of about 15%, it was on the, after we had achieved multiple years of growth in the 20 to 30% range. The industry had changed a little bit. Some of the larger acquisition opportunities were no longer available, so we were very comfortable with what appeared to be somewhat of a more conservative growth goal than what we had achieved in the 3 years prior. But we believe that we've got a track record of same-store sales growth. I think in the last 10 years, our average quarterly same-store sales growth is over 4%. In the last 5 years, it's approaching 5%. So we've got a track record of organic or same-store sales growth, and we've got a track record of acquisition or M&A growth, and we feel confident that on a combined basis, we're going to achieve that 15% that will be necessary to double the size. And we quite honestly, I try to steer investors away from understanding how much of it will be organic and how much of it will be M&A. If they want to make their own decisions, we point them to our historical track record, and there's lots of information there for them to make some, I think, reasoned assumptions.
Thank you, Brock. John, I'm going to ask you the first question about cannabis. So we've talked about vision for the future. I'm guessing some people here want to know what you think the vision for the cannabis sector is like. Wide open question. What do you see in the future in your sector?
How long do I have to?
I'll cut you off when it's done.
No, I mean, it's a loaded question. I mean, obviously, we have still a very young medical cannabis sector in Canada, only 4 or 5 years old at this point. That really becomes then the foundation for the expansion into recreational cannabis. Really, I think the next few years, you're going to see a massive expansion, obviously, in production distribution facilities across Canada. There have been announcements on millions and millions of square feet and hundreds of thousands of kilos, if not far more than that, in expansion capacity coming online over the next few years from suppliers in aggregate across the industry. I think really the untold component there is how difficult that is going to be. When we set out our plan at the beginning of 2017, it was to go from 500 to 600 kilos a year to 17,000 kilos by the end of next year. Huge growth trajectory. We feel it's certainly very achievable. There's a number of businesses that are promising to go from that same starting point to a few 100,000 kilos over the same period. I have to question at some point whether that is actually achievable. Let's not say that they won't get there. It's just very likely going to take several years beyond that. So a lot of the talk in the industry from the production distribution component, when we talk dried flower, cannabis, the raw cannabis product, is supply-demand equilibrium. We hear about supply shortages. In the onset of legalization, that may be the case. I do always provide the caveat that supply shortages are regional, they're product specific. There's a lot that goes into a product shortage beyond the news headline. But ultimately, whether it's 2020 or 21, 22, the supply-demand equilibrium is met. Producers will be working very hard to automate, to drive prices down through the floor from a production cost standpoint. Ultimately, that means wholesale distribution prices come down, retail prices come down. Ultimately, the government likely increases taxes from there to keep prices around the same point they are now, or at least competitive with the black market. But that's really what we foresee industry-wide as we talk about Canada. Obviously, the introduction of recreational use and retail stores, different provinces taking a different take on what that might be.
Is that coming?
Yeah, 1 week. 1 week.
It was a joke.
We'll see you at the ribbon cutting.
Yeah, tough crowd out here. Yeah, 6 days away for those of you who don't know.
Thank you for reminding me. No, and beyond that, I'm a firm believer that Canada is the first G20 nation to be taking these steps. We were the first country to take these steps into medical cannabis 5 years ago. We've been a leader in the previous Health Canada programs prior to 2012, 2013. But other countries are paying attention. We now have a number of G20 countries. Actually, I think there's 34 countries around the world that have implemented some form of medical cannabis program. Many of them are either importing product from Canada or they are looking to set up very similar production distribution mechanisms that we have here in Canada, leveraging the experience that we've seen. I think it stands to reason that over the coming years, we see a number of countries look to Canada's example, look to our successes on legalization for medical use, for recreational use, and what we get wrong. Everyone's going to pay attention to what we get wrong as well. So I think, I see a very bright future for cannabis worldwide.
I think most people do. That's likely reflective of the stock prices, I think. Thank you, guys. Great answers. I'm going to ask you a short one, real quick question. Feel free to elaborate, but you can answer one of the two. What book is on your nightstand, or what TV show are you obsessed with these days? Whoever wants it first. I already asked John this, and he said, book on your nightstand. People still read books? And he's like, I guess audiobooks or whatever else people do, but go ahead, Brock.
I read business books, and a favorite of mine is a book by Chester Elton by the name of All In. And this is a book that talks about the significance and importance in building culture in an organization. This book would be considered the one of the reference materials of our entire company. I was going to say Bible, but I don't want to speak to religion. But it is something that we believe very strongly in. Now, in answer to your question, I don't read business books before bed. They get me too jazzed up. I can't sleep if I do. So I actually read fiction before I go to bed, and I like authors like Grisham and Patterson and mindless stuff that I actually can fall asleep reading.
How about you, Paul?
TV, I watch what my wife tells me to watch. So I've seen Narcos, just, that world. I'm into Queen of the South, we are into that right now. I don't watch a lot of TV, but so we're trying to do that. I don't read books. I think the last novel I read was like Pickwick Papers in grade 12, so that's not my world. I do like business books every once in a while. My favorite of all time is about a 30-year-old book called The Great Game of Business, and it's by an author named Jack Stack, and it's a business in the Midwest, the U.S. that was owned, I think, by International Harvester or something at the time that was being shut down, and the employees took it over and turned it into a game. And this whole concept of getting people in your business to understand the economic engine so that they're not just, no pun intended, putting wheels on a bus, but they understand if you do it right, it has an economic impact. And if you do it wrong, it has a ripple effect and so forth. And there's stuff in there that I just love, and I use it every day. There's a lot of quotes. The favorite one from that book is he says, you can fool the fans, but you can't fool the players. Meaning, I could tour you through my shop, and you think this is really cool and sexy, but I can't fool my employee. He knows whether he's paid well or safe or trained or has the right tools. I can't fool my customer that just spent $500,000 US to buy a bus. He knows whether it operates on time and fuel efficiency and so forth. And I clearly can't fool my shareholder over the long term because he knows whether there's cash flow and dividends and equity growth and so forth. And so this real concept of going back to really knowing who's measuring the game is really, really cool.
That's neat.
Well, you got my joke answer on it.
I stole your joke, sorry.
Before, Rob, but no, for me, and to roll through both questions fairly quickly, cannabis industry seems to move so quickly. For me, in bed at the end of the night, it's either answering emails or, whatever is the newest evolution of the day, whether that's news articles, Financial Post, or Globe and Mail, or watching BNN. This is the part I hate, is there's so many regulatory changes in our business. There's very often this ever-changing landscape, and to enter a market, you need to understand the laws and the regulation, the application process. There was a very nice thing here in Manitoba a few months ago called an RFP, which was a couple hundred pages long, our response. We had to put it together in a very quick period of time. So it's very often industry related on that end. And a similar answer on the TV side. If I have my pick, it's Netflix. It's some boring documentary on history, and if it's the girlfriend, it's the Kardashians. So.
You heard it, folks, the Kardashians. I'm now into fifth gear because this is the fourth time I changed gears. We're going to talk briefly about your stocks, the three companies that trade. I'm going to ask John to flip on the first video here.
Like New Flyers and other Manitoba companies.
The bus maker.
The bus maker. And they've acquired Motor Coach Industries. Tons of synergies there in my mind. The market is underestimating what those synergies are going to be. And Soubry's a great CEO, and they're doing it the right way for sure.
So I'll start with you, Paul. The stock price specifically, what's your take on it? It's fallen a bit lately. What's your take on it? And what do you think, someone's probably going to ask you, what do you think about your stock price? So I'll ask you, what do you think of your stock price?
You as well as people in your world and the investment analysts that do the work for the banks and for other advisors and so forth, there's lots of themes and issues. It's been a really cool story to watch us work on fundamentals, generate cash flow, reinvest that in the business, then do some acquiring. We've chosen to make decisions about capital allocation. For example, last year, the rules of Buy America changed. We needed more U.S. content, so rather than pay somebody to make certain parts, we put $35 million into a facility in Kentucky that we're going to make parts, we're going to sell them to ourselves, we get the U.S. content, we get the EBITDA cash flow off those businesses. And so, you know, different people have perspectives. We hit headwinds immediately with the steel tariffs, where most people look at a bus and say, oh my God, that thing's full of steel, you must get killed. Well, Mr. Trump's tariffs had nothing to do with us because we buy U.S. steel and put it into our, because we need the American content. It was Mr. Trudeau's surtaxes on the U.S. steel that had everybody concerned. But quite honestly, we bring U.S. steel in, we send it right back in a completed bus, and so we're not impacted by steel tariffs. But the vast majority of people were worried, and so we had headwinds on the stock. By the way, the steel and aluminum is about 3% of our cost of sales, so it's not massive.
Do you think the market's overreacting then? To
Well,
that?
I think there's those dynamics of concerns. NAFTA and the uncertainty of NAFTA, again, had lots of people concerned. We have footprint on both sides of the border. 90% of our revenue is the United States. And so, you know, if NAFTA failed and didn't go through, we would then have to adjust, you know, workspace and what we build in what country. Unfortunately, Winnipeg would probably be a loser. We'd have to move more jobs to the south. Labor is about 7% of the cost of building a bus, and so if they have to ramp up U.S. facilities, all that's doable. They're speed bumps, not roadblocks. And then you have the whole dynamic about this, about Mr. Trump and his decision making on all kinds of things. The fact that we're largely a government-funded customers has people wondering and worrying about, oh my God, is he going to change the way buses get funded, and on and on and on. If you look at the fundamentals of our business in terms of EBITDA margins, cash flow generation, return on invested capital. I mean, we've gone from about 5% return on invested capital to 15.5% in 7-8 years. And so I think we're making the right decisions. The trick for us is not to get sucked and worried about today's stock price. It's absolutely down over the last 6 months. I think a lot for headwinds and perceptions of our business. But you look at the actual performance of the business, we can't get worried about that. I think we got to look about long-term, we're going to get rewarded in terms of the performance of the business. There's going to be volatility in stock price.
Yeah, at the end of the day, you're going to be measured on a multiple of your profits, right?
True, and unfortunately, we're measured on people's expectations or guesses of what my profits are, you know, going forward, and so there's that dynamic.
You guys are doing share buybacks as well?
So what we decided to do is, you don't get the numbers wrong, but directionally correct. Over the last 5 or 6 years, we've spent $600 million on acquisitions. We've spent about $200 million on investment in the machine, make it faster, better, cheaper, make some parts and so forth. We spent about $350 million in dividends. I mean, we're not a sexy growth industry, and so our view is that a dividend is a critical element of our story. And so if you bought a share today, your yield is 3.2 or 3.3 or whatever. And we think that's a neat part of the story. And then earlier this year, as we saw our share price start to tumble, we felt it was appropriate to say, hey, we got a lot of confidence in the value of our business. Look at the fundamentals. And so we put an NCIB in place in June, and from then to now, notwithstanding the blackout periods, we bought about $40 million worth of shares back. So,
an NCIB is a normal course issuer bid when a company decides to go out in the market and buy back their stock. They think it's undervalued, essentially.
Well, I can, you know, we're a very, very strong cash generator, right? We generate about $250 million.
What's the dividend payout ratio on the 3.3%?
It's about 40-something%. So notwithstanding all the money we've been putting in our business, we have the room to do that. And so our decision was, at this point in time, based on the market's perspective on our share price, it was a good investment.
Thank you. Next company, little, wait, all right, let's go. Seen this one already.
My favorite for sure at this point would be Boyd. I like what they're doing. I like it at this point. I think this is going to be an $80 stock in 2016.
I must say, before I get to my question, all three of you have given me a hard time with clients, by the way. Paul, your problem was I inherited a client who had nothing but New Flyer stock in his portfolio, the only position he had in his portfolio. And I strongly advised him to diversify. Well, sure enough, the stock doubled in the year after or whatever, and I looked like an idiot because I sold some of his New Flyer stock. For you, Brock, the issue is the clients that have it in my accounts at $6 or $7, they're giving me a hard time every time I'm trying to trim the position to diversify. And for you, the problem has been anyone who's owned the stock and it's doubled, they want to load up and mortgage their house and put everything they have in cannabis. So that's kind of the same question. I'll get to you with that question. But for you, Brock, what do you think the stock price is now, and how do you see? Do you think it's properly valued?
I'm not going to answer that question. Similar to Paul's answer, the financial markets the investors value a stock based on what they think it's worth. All we can do as a management team is have the right strategy to continue to grow the business, not only from a top line, but from a bottom line perspective. And as I've already commented on, our strategy, our plan is to double the size of our business from 2015 to 2020. We are on pace to do that. We will see continued growth from now to 2020. And that's growth not only in top line revenue, but we've also seen our EBITDA margins expand over time. I think since 2012, our EBITDA margins, that means EBITDA as a percentage of sales,
earnings before income taxes depreciation,
has grown by 220 basis points in that period of time. So not only are we growing our top line, but we are also expanding our margins so that more of it is falling to the bottom line. And that's really that's the plan that we're under. We believe we'll continue to grow revenue, continue to grow profit, and how the stock market values that profit is really up to the stock market.
And you guys have increased your dividend. Correct me if I'm wrong. Like how many consecutive quarters?
We started. We've increased our dividend every year, not every quarter.
How many consecutive years?
Since 2007. Yeah. Now, having said that, we characterize ourselves as a growth company with a yield.
Right.
And if yield investors generally will not buy our company just for the yield, our yield is less than 1%. Our payout ratio on a trailing 12-month basis is less than 10%. So we're distributing a very small percentage of the cash that we generate because we want to invest that cash back into our business, to make more acquisitions, to invest in equipment, to generate organic same-store sales growth. So we're not so focused on yield, we're more focused on the growth.
And I guess it makes sense if you're able to grow it at 15%, why would the shareholder want that dividend, right? In theory, he'd rather you put it back in the company and grow the earnings.
That is the theory, yes.
Great. Let's see the third video, Jean.
You told me during break that you get all kinds of phone calls from clients who want in to the marijuana stocks. I guess they're asking you which ones are the winners. What do you tell them?
It's kind of a phenomenon right now. We're getting a whole bunch of phone calls in Winnipeg, where I'm a proud Manitoban and proud to be from. Delta 9 this week, CEO John Arbuthnot. Actually, John, great guy. He used to work for me. He got into the business as a cold caller, and now he's a CEO of an IPO-listed company, $60 million company on the TSX Venture. That fuels some news in Manitoba. So people are picking up the phone, they're saying, wow, I want to be part of this. I want to be part of this. And people think, if I would have got in on tech early, how much money would I have made? So a lot of people don't necessarily understand what the sector looks like and how it works. But yeah, I'm getting a ton of phone calls, and you're right. They're asking me which ones to buy.
So my question for you is specifically the stock price. So the individual out there, my mother-in-law or my cab driver on the way here who's telling me that they've mortgaged their house, they've pulled everything out they have of their net worth, and they've invested everything in cannabis stocks. What do you say to them, and what do you see the future of your stock price? Which, by the way, they did the equity raise at, it was 20 cents, 25 cents or something? What was the equity raise at?
Ooh, in the last...
the most recent one before you guys went up.
Our go public, our concurrent financing was 65 cents.
Okay,
our
sorry, I'm
trail
thinking
on
the one before.
financing was $2.78 a share.
So 65 cents, and the stock's at, I don't know, $1.60 or so right now. So what do you say to those people?
Well, funny thing about the cannabis industry, there's so much, noise. To tag along on a few of the previous answers here, I'm not going to tell you what the stock price is going to be. Apart from that, I think it's undervalued, but I think every CEO has the opinion that their stock is undervalued at some point. So, when we look at the cannabis industry, and at least Delta 9 and myself, we try and have more of a long-term focus. We try and focus more on ultimately what will lead us down a growth path over the long term, considering some of the macro things that are coming into play over the long term. We try and take out a lot of the noise. We're a management team that's very invested in the stock. Directors, officers, insiders own about 46% of the overall stock. So, we make money when the shareholders make money. And we have a very long-term view for Delta 9 and for the sector. And we've spoken to some of our thoughts on how this will become a global sector. We've spoken a little bit on our positioning in terms of investing in these grow pod units, and for every dollar invested, it will produce between $8 and $10 of revenue on an ongoing basis, or on an annualized basis for us. So we try and take out some of the noise. We try and put in a growth trajectory that's focused on return on invested capital. Ultimately, the cannabis sector will stop trading on noise. It will start trading on metrics. I think that will start to come in 2019 when we start to see companies produce earnings post-legalization. Ultimately, there will be a shift where some companies have promised the moon and are not able to deliver. Our goal is really to continue to show that incremental growth in terms of top-line revenue, ultimately reaching profitability, to show that there's a healthy gross margin there, that we're continuing to pay attention to the macro climate, again, de-risking ourselves versus that impending supply-demand equilibrium and price compression with vertical integration in retail. So these are some of the ways that we position to become a real company in the cannabis space and not just someone who puts out good press releases. So there is certainly an underlying focus for Delta 9 on building a very real business over the long term. As that translates to the stock price, I couldn't tell you whether the cannabis market's going to go up, down, or around in circles tomorrow.
Fair enough. I do want to hear from you guys. So, but before we get there, there's a stack of envelopes on your table. Yeah, that's the evaluation forms. So I'd like to think that we could hold you hostage here without leaving today, without filling out those evaluation forms, but I actually can't. It would mean a lot to us if you did fill them out. So please take a moment to do that. In the meantime, if someone's got a question or two for one of our CEOs, I'd be happy to take that question. We got Glenn in the back. So the question is, for Brock and Paul, how is AI and self-driving vehicles going to change your businesses over the future?
Well, maybe I'll start. So our world is really, really focused on the electrification dynamic today, being able to, take the combustion engines off, whether it fuel tanks or natural gas tanks and so forth. And the biggest issue is range. And we're spending a lot of time now as the price per kilowatt comes down, the energy density of batteries, the charging strategies and so forth. We do have, on some of our buses, the same kind of things like you have in your car with adaptive cruise controls, lane departure type dynamics, 360 cameras, telematics, and all this other stuff. The reality of autonomous driving, in the whole, from level 0 to level 5, and we're dealing mostly in a public transit environment. It's one thing to have a bus around the UCLA campus with no driver, but a bus in New York City in the next couple of years with no driver isn't going to happen. And so the 5-year window around autonomous, your question or comment, for us is a much longer journey. You have liability dynamics, you have public policy dynamics, you have all these other things that are going to take a long time before we believe autonomous drive. Not that the technology is going to hold it up, it's going to be everything else around it. Government issues, policies, insurance, all this other stuff, lawsuits.
In terms of, we sort of group collision avoidance along with driverless technology or autonomous vehicles because really what builds an autonomous vehicle are all of the subcomponent parts, collision avoidance or ADAS, that really then get controlled by a computer to create an autonomous vehicle. The reality of it is, for a variety of reasons, including infrastructure, including age of fleet, that the average fleet in the US today is 12 years old. It would take 15 years to replace that fleet. Even even once, and you have to get to a point where every vehicle is autonomous, and then it would take 15 years in order to create an autonomous fleet. Many people have done studies as to the overall impact on accident frequency per miles driven as a result of collision avoidance that are component parts to autonomous driving. And the study that we think has the most validity is one put out by a company called CCC Information Services, and they estimate that collision avoidance will negatively impact accident frequency per miles driven by about 30% in 25 to 30 years. There will be a number of offsets to that market decline, if in fact it is 25 to 30% or 30% in 25 to 30 years. Firstly, miles driven continues to go up. So there will be offset by more miles driven that will offset the frequency per miles driven. Secondly, the cost of repair for vehicles that have all of this more complex equipment continues to go up as well. So we'll have revenue gain even if there are fewer accidents. And thirdly, we believe, and for companies like Boyd that have a leadership position in a consolidating industry where we have huge opportunity for market share gain every year. Today we have about 3% of the North American market. We believe that we can gain market share faster than that 30% market decline is going to occur. So that's really our collective aggregate view on collision avoidance in driverless vehicles.
Thank you, Brock. I think we have time for one more question. The question is blockchain and how that is being incorporated in your business.
Yeah, interesting question. Not yet, at least not for Delta 9 Cannabis, but you know, we've had a lot of discussions with some blockchain groups. The technology from what we've seen really isn't there yet from an implementation standpoint. There's a lot of discussion in the cannabis industry as we've driven forward to legalization on seed to sale. This is it's a nice buzzword that governments use to try to relate to people that they're going to have control over the entire supply chain. If we were to talk blockchain in the context of seed to sale tracking systems, that would mean buying a product off the shelf and knowing exactly the plant that came from or the grouping of plants that came from in a facility. And that's where the technology is going. What I think is holding it back is that this is all very new in terms of the context of the sector. What governments have been focused on the onset of legalization is ensuring that there is forwards and backwards traceability in the supply chain, very much like pharmaceuticals, in that when I sell to someone or when I buy a product, I need to have traceability back to my suppliers. I need to have traceability to who I'm selling that product to. But there's not necessarily visibility throughout the entire supply chain for every component. That is, again, where blockchain would bring the whole thing full circle. You know, funny enough, I meet with the blockchain groups who are pitching this for cannabis, and I don't see the value for my business. If I were a government regulator, I would be all over this stuff in terms of actual seed-to-sale tracking systems. But again, we're just not there in terms of an industry buy-in or a government or regulatory making that a necessity for business. So probably more to come, but I think like a lot of the conversation around blockchain, it's not quite there from a commercialization standpoint. Yeah, so from that perspective, you know, we look at our facility in terms of meeting EU GMP requirements. But again, that's backwards and forwards traceability. So for us, when soil comes into the facility, we ensure that there's traceability back to the suppliers, ensuring there's proper certificates of analysis and manufacture, testing certificates to ensure there's no pesticide residues or things like that. There's control of those input materials in our facility before that's put into production. But you know, again, ultimately, we're concerned about the component in the supply chain that was one step before us, not necessarily where the farm was, that the original input materials or factory or whatever those component inputs are. So again, not quite there from the cannabis industry perspective.
So thank you. I do recognize that I did put in the invite. I'd be wrapping her up around this time. So on behalf of myself at Canaccord, we got Clint and Becker as well. Everyone at the office, so that includes Wayne, Derek, Jody, Jean-Luc, Esther, Jean, my father, Claude in the back. I'm for sure missing some. Markar is here. Anyways, the entire office at Canaccord, Clint Orr, Kevin Becker, and the actual firm Canaccord, we're thrilled to have been here today. We're thrilled to have had these three CEOs. If we could please give them a great round of applause. And I'm going to finish with a little anecdote for you guys. I was 19 years old, and I was convinced that it was fairly easy to run triathlons. I'd just done a marathon. I was playing university volleyball. I was fit. Not like now, but I thought it would be pretty easy to run a triathlon. So I looked one up. There was one in Lac du Bonnet. I rented a bike. I was a decent swimmer, and I was a good jogger. I figured it'd be kind of no big deal. I showed up, went to the lineup, and I was doing the old, back foot stretch or whatever. The guy comes up to me and says, "Sir, sir, sir, this is for competitors only." And I had my Billabong bathing suit with the flowers on the side, and everyone in line had wetsuits, goggles, and like their trainers with them, and these high-performance bikes and everything. So I was like, no, I'm in the race. So, all right. So the gun goes, and everyone jumps out, and I get elbows in the face and feet, and I say, you know what, I think I'm just going to step back a bit. Did the swim part, passed quite a few people. I was actually a strong swimmer. Then I get to the bike. So, all right, so I get on a bike, couldn't figure out the gears, couldn't figure anything out. Anyways, I biked, passed a few people, and I'm like, I can't wait for the run, because I'm a good runner, and I just finished a run. It's going to be so easy. So I get off the bike, and my glutes are frozen. So I thought I could do this all on my own. I ended up getting passed by most people. I still finished the triathlon, but I felt at that time, if I would have had some good advice, I had all the skills, I thought I knew everything, but if I'd have had some good advice, I feel like I could have done way better. If someone would have told me to wear a wetsuit, to wear some goggles, and to get the lactic acid out of your glutes would have been some key points. That's a quick anecdote to let you know that we are open for business. We at Canaccord Genuity are open for business. Clint, Kevin, myself, we're here. We'd love to work with any of you here that are not clients. We'd love to work with you guys. We're very proud of what we do. Nothing else matters for us except clients. So I know Clint's got some clients and some non-clients in the room. So does Kevin. So do I. We'd love to work with you. So this is my formal ask, as much as you're going to get from me. If you're interested in any way, pick up the phone, give us a call, or just write it on the evaluation. We would love to work with you, and I'm sure you wouldn't be disappointed. Once again, thanks to our CEOs. If anyone's had a few drinks and wants a taxi chit, we will gladly provide you with a taxi chit if you've had too much to drink and you're not comfortable. Otherwise, have a great night. I'm sure people are going to hang out a little bit. And thanks again to our wonderful CEOs. Have a great night, guys.